There's 5 basic rules for Chapter 7 dischargeability of a 1040 tax year. Okay, so this is really important stuff. First of all, the due date of the return, including any extensions, must be at least 3 years old or older. So in other words, the due date, the April 15th following whatever tax year, has got to click off 3 years in order to even start to qualify for dischargeable debt in Chapter 7. So, looking at where we are right now in February of 2019, coming up on another April 15th, you would be able to discharge things that would have been due as of April 15th of 2015. All right, because the closest April 15th to us would be the 28th, or not the closest to us, but the most recent one would be April 15th of 2018. So you click back 3 years, which puts it at 2015 tax year. Okay, so anything as we sit here today, 2015 and back. Okay. Next thing, to qualify for a Chapter 7 discharge of 1040 personal taxes, any late return that was filed must have been filed for at least 2 years. Okay. So it's got to have been on file for at least 2 years in order to qualify. And notice here, this is a good point to bring this up, these returns have to have been filed. Okay. In other words, if you didn't file in it's 3 years old or older, and you qualify for that part of the analysis, it's still got to have been on file for at least 2 years. Okay, no April 15th qualifier there. It's just 2 calendar years that it has to have been on file. Next qualification, the assessment of the tax must be over 240 days. In other words, the IRS has to have processed the return in question that you're trying to discharge and actually have tallied up what you owe, including penalties and interest, and essentially sent you a tax bill. So 240 days have to have clicked off in order to qualify for Chapter 7 dischargeability of an individual tax return. And the return must not have been deemed fraudulent. All right, and that's a little outside the scope of what we're talking about here today, but just know that it can't be a fraudulent return. The taxpayer must not have been guilty of a willful intent to default or evade tax. That's another one kind of along the same lines as the IRS deeming it fraudulent in the process. Okay, so fraudulent or intent to evade tax, those types of returns won't be ever eligible for a Chapter 7 discharge.